Welcome to Fiscal Voyage. My name is Felix, and today's video we're going to talk about a stock that dropped over 11% in one day because of earnings. And this stock presents a good buying opportunity. However, I am currently waiting for a little more downside because there's huge support level in the technicals, and I'll show you that later in this video. And so we're going to cover the fundamentals as well as the technicals for this company. It has a solid dividend yield and it has been growing dividends for over 14 years consecutively. So overall, solid company. So let's get started. But before, if you're new to the channel, hit that subscribe button, and if you enjoy the video, hit that like button. So let's get started with the video. Okay, Intel Corporation, ticker symbol INTC. So the stock yesterday had earnings, and we're going to talk about the earnings shortly. But you can see here right now it's going for $49.46. So it dropped because of earnings over 11%, 11.68, and pre-market is down almost 0.04% for Monday's open. So let's talk about why this stock dropped over 11%. So if we go to the earnings details, they actually beat earnings estimates by 60 cents, but missed on non-GAAP revenue. But it was still 4.6% higher year over year based on the third quarter of 2020. And you can see here for non-GAAP earnings, it earned $1.76, $1.71, and it beat it by 60 cents. And GAAP earning of $1.67 and beat it by 61 cents. So just that alone, it looks really good, but we need to go into more of the details. And they also provided guidance for the full year of 2021. They're expecting $4.50 in GAAP and $5.28 on non-GAAP earnings, which is almost flat compared to 2020. And it is higher than what their previous guidance of $4.80 and $4.11 respectively. And guidance for Q4, they're expected to make around 18 billion to 18.26 billion. And they expected to earn 90 cents to 94 cents for Q4. But overall, to me, that looks very solid. But if we're gonna look at the chart later on, and you can see a lot of times when Intel announced earnings, the stock just drops. And during those times, I've actually been able to collect, and it raised after a few weeks or maybe a few months before the next quarter, and then reports, and then it drops again. So I think this is kind of a similar aspect, because this company still generates a lot of revenue, is growing as you saw, and earnings is also growing. But we're gonna look at the fast graph and look at more information. Intel Corp, you can see here, earnings has been very erratic. You know, there's been years where it's been kind of flat over here in 2005 to 2009, and then it had a huge growth, and then down for a few years, 11% down in 2013, but then boom, 22% increase in 2014. And then in the most recent years, it had a tremendous growth, which was what's caused the price appreciation. So from 2016 all the way to 2020, you had 17%, 27%, 32%, 6%, 9% in compound growth year over year. So it is slowing down, and analysts are expecting a big drop in earnings for 2022, negative 31%, compared to this year estimate of $5.28, as we saw from the report. So that's concerning, but it's not something doesn't happen before for Intel. You can see here they've had earnings drop, or flat throughout the year. So it's very erratic earnings. So this is normal. It's a big drop, compared to the previous time they had here 39% in 2006 and a 22% in 2008. So it is a big drop in earnings. But if we look at forecasting and 5-year, analysts are expecting about 6% growth in earnings. And if we look at Yahoo Finance, over here, they're expecting 10% earnings growth for the next 5 years. So overall, it's not unusual for the company to have these down years in earnings, but they're expected, this is a technology company, we're gonna need chips for all the Internet of Things. So This is why I kind of like this stock at current prices, but I like it. I'm waiting for a bigger drive. We're gonna look at the technical shortly, but for now, the dividend is well covered. We're gonna look at the operating cash flow. The company has an A plus credit rating, a current dividend yield of 2.8. So when we look at the technical, we're gonna see that potentially you get over a 3% yield on a dividend growth stock that's been growing dividends for a very long time. I think, let me see here, you can see from 2004, they've been growing dividends over, 14, 15 years. So that's outstanding. During COVID, during the Great Recession in 2008, 2009. So that just shows you the quality of this company. Long-term debt to cap at 26. 26%. Wait, no, I'm doing a video. YouTube. Long-term cap ratio. Long-term debt to cap ratio at 26%. So overall, solid company here in Intel. Operating cash flow, we're gonna look at to see the coverage of dividend. And you can see here it's very well covered throughout the years. Again, it's expected to be lower for 2021 and 2022, about negative 9%. So overall, solid company. And if we're gonna look at Morningstar, they provide a 4-star rating for Intel, which is a buy rating. And you can see here they have a fair price of $65. And as last close from Friday is at $49.46. Has an economic moat of Y, so that's very solid there. And we're gonna see that if in the technical chart, we'll see that the stock could go potentially up to $42 or $43 a share. And we're gonna look at the interest coverage, 36 interest coverage ratio, outstanding, and debt to equity ratio of 0.0 or 0.4. So that's great balance sheet. So overall, solid balance sheet. So if we look at the technical, this is the monthly chart and this is the weekly chart, and these two are the daily charts. And you can see here in the daily, on Thursday, Intel closed at $56.07, and then based on earnings, it capped down to $50.39 and closed at $49.46. But if we look at the weekly here, the stock has potential to get down to $44 to potentially $42 or $43. You can see there's major support in the $42 to $44 range. You have support over here at $42.36, over here around $42. You had over here on the March low of last year, $43.63, and in October of last year, $43.61. So that's tremendous support. Buyers stepped up in numerous times, 1, 2, 3, 4, 5, 6, 7 times. Buyers stepped up around the $44 range. So overall, I'm waiting for this stock to get that low around $44, $45, maybe $42 to purchase more shares. And here's the monthly chart to show you even better visual of that support level right in that area here around the $42 area. So this is why I'm waiting. Right now it's at $49.46. So we have a potential another $6 down for Intel to get lower. So overall, I like this company, but I'm looking to buy around the $44 range. So those are my thoughts on Intel. Again, it's a solid company. I personally will wait around the $42, $43 range before I look to buy shares. I currently own shares around the $46, so I'm still slightly on the positive. But if it gets to the $42, definitely buying more shares. As you saw in the technical, super strong support level in that area. So overall, I like this company. The dividend is very safe, as you saw. Operating cash flow very well covered. The debt is good. High credit rating. So overall, solid companies. You know, it's just unfortunate that every earnings the stock jumps either extremely high or extremely low. But overall, solid company. Thank you for watching. If you're new to the channel, make sure you hit that subscribe button, and I'll see you guys in the next one.